Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. This video is for educational and entertainment purposes only. I am not a financial advisor. I recommend highly that before buying any security, speak to a financial advisor and do your own due diligence. Hey everybody, Tim from Alpha Wolf Trading coming at you with a follow-up with one of my favorite companies. I've done quite a few interviews with this company and they just reported numbers which disappointed the street. And that's okay. I'm fine with that. That's in the past. I'm more interested in where we're going. And there are a lot of things when it comes to the numbers that are beyond management's control at DUOT. It really comes down to scheduling with the opportunities haven't gone away. They're still there. It's just they've been postponed for whatever reason. Mainly, I think one of the reasons was they have too many projects going on at one time and can't manage it all. Is that be accurate, Chuck?
Yeah, it is. And I can address the shortfall in revenue for last year directly and head on so folks can try to understand a little bit better. So we had basically three major things that occurred to us last year. So Amtrak, that we were in a contract with, had delays that, they are out of our control. And that caused a delay in the actual installation of the two large portals that we have in contract at Secaucus, New Jersey. To give you a backdrop on that, so Amtrak right now has a great problem, and that is that they've been funded with monies probably more so than they ever have, probably in their history perhaps. And they've got many, many, many projects that are ongoing, as you can imagine, bridge improvement projects, tunnels. Our project is one of those, and they're very resource constrained to run that many projects at one time. So that was probably about half of the revenues that we expected to take in. Now the good news to that is that one, we haven't lost any of that work. It's just still in our backlog. It is expected to come through here in 2024, but the overall value of that contract, which started at about $9 million total, is actually grown to now greater than $15 million. So bad news is, we didn't get to recognize the revenue. The good news is the overall value of the contract is much higher. And then we're also having we're in planning right now for the next one or two portals to go in. Those are actually being programmed into their budget. So again, Amtrak's a very important and good customer for us. But that was part of the challenges. The other half of the revenue is really attributable to two of our other Class 1 customers that had similar project delays and/or delayed in ordering new things. One of them went through a merger, so obviously that's CPKC. So because they went through that merger, they froze their capital budget for a bit, as you can imagine, and now that pocketbook's starting to open back up. So that's last year.
Okay. The merger, though, is there any chance the merger squashes your deal?
No, the good news there is, so we put this in our earnings call. So CPKC, which is largely led by CP, because we originally sold our portals to Kansas City Southern. So yeah, we were concerned for a little while that maybe CP wouldn't be as much of a fan of our technology as KCS was. The good news is that they have become good fans of it, and they proved that to us when CPKC extended our services and maintenance contract another 3 years. And then they also, in addition to that, they took and are basically they're paying for an AI, what we call an AI enterprise license that has over 40 of our algorithms in it, and they also purchased that for 3 years. So that's huge. And when we're in commercial discussions with them to expand where it's appropriate for them.
Okay. So I would say both of those things are fantastic, and they're still coming, and you're not just like kicking back, just waiting for those things to come. You're working on other things too, right?
Yeah. So when we took on our earnings call, we talked about, we do have a pipeline of $100 million, worth about $100 million of opportunities in the rail space. And that includes, pretty much all of the Class 1s. It includes current customers, which are ordering more. So, a lot of the monies that we'll take in this coming year, and why I'm pretty confident about this year, is that, we've got current customers that are modifying and adding more work to their current contracts. And so that's a good piece of the revenues that we'll make this year. That's on top of we've got about $6 to $7 million of backlog, contracted backlog already. And then new opportunities, we're pretty close on closing deals with either in the subscription area that we've talked about before, but also with, I'll say, some non-traditional folks that would buy a railcar inspection portal. So we've got one large shipper that ships hazardous material, and they have large facilities where they load this stuff. So we're in close discussions, and we think that they're probably going to approve that they want a portal basically for their loading facility to basically check stuff in and out. So there's several opportunities that are like that we're kind of waiting, to come across the line, but there's others that are being developed. And then we did talk in the earnings call about the diversification of the business, which we can talk about if you'd like.
Absolutely. Let's go ahead and tackle that right now. So you did highlight that, and you have highlighted that in the past, that if you look at what DUOT Technologies is, you're not a railroad company. You're a technology company.
Yeah, that's absolutely right. So we're not a railroad vendor. Now we got some railroad companies, obviously, that are buying this particular solution, but we're in the machine vision, artificial intelligence, and edge computing business at large. So, I've talked before, over the last year or so, about the desire to diversify and take some of the risk out of the rail side of the business and diversify in other areas where we have the skill sets to do that. Very quietly, we've been kind of working that in the background, and we're finally at the point right now where we're getting ready now to diversify into the edge computing space. We already do edge computing and edge AI inferencing at all 13 of our railcar inspection portals. So we already do this, And so we've recently been approached by a few telecommunications companies
Yeah.
that are rolling out 5G AI inferencing at the edge, which is super hot market right now, and asked us to help satisfy the demand for edge computing. So we're developing a couple of those deals right this moment, and we expect to be able to provide some hopefully some successful news here in the next few months with that.
So I think this is the real definitive word that people I think may want to pay attention to is you were approached. You didn't seek them out. They were seeking you out.
That's correct. I think it's for a couple of reasons. One, I mean, we already do these. We already use all these skill sets now with our railcar inspection portal. Number one. Number two, because of the advances that we've made in the computing solution. So, we're partnered with Dell Technologies and NVIDIA, and using those two partners, we're probably the premier artificial intelligence developer in the rail space. And part of that requires some really high-end, fast computing power at that edge. And that's exactly the capability that everybody's looking for, to basically speed up the use of 5G. A lot of infrastructure money from the government has been pointed at, rural communities that don't have high-speed internet. This is part of that solution for that. So that's part of that. And then the other piece is when they come and they meet us, they see the team that we have here assembled. And that the team that we've got here, I cannot overemphasize, not just at the leadership level, but down in the technical areas of hardware, software, AI, IT, the install teams and all that sort of thing. It's probably one of the best teams I've assembled at my prior companies as well as in the military. So a talented team that's got the ability to do lots of things besides just servicing the rail industry.
Chuck, in your opinion, does this company today look anything remotely like the company that you came into, what was it, almost 3 years ago?
No, well, certainly the staff is it's about the same size, but the staff is it's a different staff. We've talked about this before. We have probably eight. We got 75 employees in total. Probably about 10 of those employees are what I'll call legacy employees that we recognized when I got here. Some really tremendous talent with those legacy employees, but in my opinion, they weren't really being I would say they weren't being fully utilized to their ability. That's the first thing. And then a lot of the other employees, over time, we've kind of swapped out and upgraded. And so we have an excellent retention rate right now. We don't really have a problem finding new talent when we want it. And that's not easy when you start talking about software, AI, hardware engineering type talent. Sometimes it's hard to find that and hard to keep it. So far we've been pretty good with that. And that's why I think, I feel confident that this is a great platform to diversify with and also, get some significant growth with.
So is at $100 million, let's say you were to land, I don't know, 80 million. Would that be the biggest backlog that company's ever had?
Yeah, I think in our history, the biggest backlog number we've probably had is probably in the $8 to $9 million range so far. We're at about a $6 to $7 million backlog right this moment, which is really small compared to some of the companies that I've run before. The deals that we're looking at in this edge data center space, they're pretty sizable contracts, significantly larger than any that the company's previously had, and it's right in our wheelhouse. So I'm pretty excited about that. And to be clear, the edge data center business, which is all about AI at the edge, is it's all recurring. It's recurring revenue. So it's so we've talked about how important it is to get good, solid recurring revenue and backlog. This is exactly in that wheelhouse. And so that's why I'm so excited about it. So.
And that makes me excited because that's my favorite business model, Chuck.
Yeah, it should be, right. It'll provide, again, the reason why you diversify a business, and I did this before at previous businesses, you diversify a business to take risk out of one or two lines of that business. They kind of offset each other, right? So you got one line that's got good, solid recurring revenue, allows you to take, a little more risk or, seek, maybe, other opportunities in the rail space, right, that you wouldn't ordinarily be able to do because you don't have the wherewithal to do that, right? So.
So let's talk. In the last few weeks, you had a pretty big, I guess, group at your facilities there that maybe typically probably I would say can be a stumbling block for some companies, technologies, right? Because they don't necessarily get embraced. Maybe you could tell us a little bit about that.
Yeah, so in the rail industry, you've got we'll call them a number of stakeholders, right? Class one railroads, obviously, and AAR is obviously the biggest and stakeholder in that. But other stakeholders include short-line railroads, the labor unions, the Federal Rail Administration. So about 2 or 3 weeks ago, we were requested and we hosted about 15 or 16 of the National Union of Mechanical Carmen. Their national level leadership came to our building here. We gave them a tour, showed them the technology. Probably got a good 5 or 6 hour visit. They were super impressed. I had previously hosted one of the labor union leaders here before, and so he came back with all of his friends. I will tell you, in my opinion, that labor union now is very, very supportive and would really like to see this technology in the hands of their membership. And to be honest, we've talked about this publicly. The people that should be using this technology are the qualified mechanical personnel inside the railroads, because when they see the data and when they see the images, their eyeballs are trained to really look at these things and find the defects. And that's some of our current customers are proving that theory out. And so I think with the labor union support, I'm expecting to have a similar visit with the Federal Rail Administration in the next few weeks. And I'm expecting they've been supportive in the past, and I'm expecting further support. So this is kind of real helpful, because the technology is really new to this industry, and this industry, is typically one that slowly adopts things. So this is very helpful. 2 years ago, we would have said that would be an impediment or headwind for us. I would now consider it that completely flipped, where we're seeing both the FRA and the labor union supportive of the technology.
Now it's wind at your back, right?
That's correct. Yeah. And it's again, that was also a very good day when they left here, and we're pretty positive and very supportive of the technology.
Okay. So I want to go back to the amount of shares outstanding, fully diluted. What are we looking at there?
Yeah. So thank you, Faye, for providing me. Yeah. So the full total share count, fully diluted, is just a shy of 14 million shares.
14 million shares. Okay.
Yep.
14 million shares. And what's the current market cap right now? What is that?
Yeah, market cap. Where are we at right now? We're at 25, which was horrible, right? Yeah.
Hey, 25. And of that $100 million potential number, is that only railroad, or is that railroad and outside of railroad?
Right now, that's only railroad. I haven't even I'm not giving you the number for what's in that edge data center.
Okay, you don't have to. I'm not asking you to.
It's a big number.
We're just talking railroad. There's
Yeah.
100 million potential.
Yeah.
Right. And you got a $25 million market cap. Okay. I'm not going to say anything. All I know is that I have gotten to know you extremely well over the last, you have an incredibly small share count. I would say that what's the insider holdings, Chuck? What's the percentage of that? You know?
About I'd say about 50%, 40 or 50% are what we would call long-term shareholders. It's a group of probably about 3 or 4 that own that percentage. From a voting perspective, none of them have more than 20% of vote, but in terms of the overall share count, they've got probably about half of it. Look, these are long-term shareholders. They strongly believe in us. We've recently we raised a little bit of capital recently with some of our current shareholders that we're talking about now, but we've also added a few new shareholders that I would consider long-term shareholders. They believe in the business, highly supportive, and they have been very clear that Chuck, build a valuable company. Try not to worry too much about the day-to-day stock price, and so that's how we're trying to operate.
Perfect. That's great advice, by the way.
It's the only way to properly run a business. I mean, if we're able to convert on this railroad pipeline and then diversify into this edge data center thing, and I've got one other area I may diversify into that I won't talk too much about right now, but the goal is to build a much larger, more valuable business, that pays off for everybody. The shareholders, the management team, and the employees.
That to me sounds like a win-win-win.
Yeah, well, we've done it I've done it before. I'm sure the audience knows. I ran a company called Arma Global. It was a very small company. It had a single line of business, and we did diversify that business. And in about 4 years, it grew up to it was worth over $200 million a year in revenue, and it was sold after basically a bake-off, to General Dynamics. So it became very valuable very quickly, and it was because the owners, and I was privileged to be their operating officer. The owners made some difficult decisions to diversify. They stuck to it, and it really paid off. And I think the same thing can happen here.
So let's just recap real quick. Your partners that you're dealing with are Dell and NVIDIA, who I'm pretty sure NVIDIA is considered to be, if not the top, one of the top AI chip companies on the planet, right?
Yeah, certainly. Yeah.
Pretty good partner to have, right?
Yeah. So basically what we do is Dell obviously provides high-end servers for us, and then NVIDIA, of course, we use their GPU cards for all this high-end computing. So basically the partnership is like these are basically commercial off-the-shelf technology, but then there are some bespoke things that are done to the NVIDIA and the Dell equipment suited for our particular use. And that's what allows us to have this edge computing that can literally spit out a minute later, results from a rail car inspection. And so, that combination of technology and the know-how that we have here is what makes it so powerful.
And to highlight, you brought that technology in-house.
That's right. I'm pretty sure we're probably the only machine vision AI company, at least it's operating in the rail space. We do all of the functions of producing that AI in-house. So all of the software talent, all the AI talent, all the IT talent, all the hardware engineering, all that is here in-house. We're not getting it from overseas. It's all here in the United States. It's a small team, but a very, very efficient, very efficient team that gets things done.
And I'm gonna go back on, so the sales opportunities that have opened up, does it have anything to do with the last individual that you brought on to the team?
Yeah, it does. We talked about Chris King, who is our Chief Commercial Officer, and he's been with us now for about 6 months or more, I think. He was my Chief Commercial Officer over at APR Energy. He is a very experienced kind of deal guy. He understands how to take deals and get them through the closing process. He's done hundreds of millions of dollars of deals in the power industry. He's got a background in logistics, and he's very well suited here. So he's gotten us, I would say, much more organized and focused in really identifying the deals, getting better business intelligence around those deals, which is really important for me. I kind of trained him on how to do that when he worked for me at APR Energy. And so it's a real joy to watch him kind of take all those things that he learned in that last business where he worked for me and apply it here. And I think overall the company's been really thrilled to have him. And I think we're going to see some success because of that and because of the work that he's been doing. Yeah.
Okay. You feel as though I've missed anything, Chuck?
No, I don't think so. Look, our story is this: don't judge us by quarter to quarter results. And we're doing things here that are going to come to fruition and kind of make it so we're not just inside just this rail space, but a little bit of diversification, and probably significantly adding to that recurring revenue is what's coming. So that would be my overall theme.
I think that's a good theme. I think one of the things I want to highlight is that when you have a company that's got as few shares as this company has, it's very easy for some of the, what do I want to call them? I want to call them scumbags. That's probably not appropriate, though.
Sure, show mine.
Some of the nefarious players out there that like to create opportunities for shorting a stock. When you're not real highly covered, it's easy to put out, let's say, misleading or inaccurate statements on social media and have an impact, right? So this is not that's the thing about microcaps, is they can be extremely volatile. But what's beautiful is if you understand the company, if you know what is happening, and you can trust management, you can look them in the eye, ask them a question, and get the answer and know that you're good. Those things, when those things happen, those are gifts from. They're gifts. Nobody's ever going to take my shares ever, right? And if they drive it down to stupidity levels, I'm going to buy more. So I like the way the chart is setting up, and actually I'm going to move your logo for just a second.
Yeah.
So that I can. Let's see, where is it? Over here. So I can show everybody the chart. You're coming down to an area of support again, which is the $3 mark. And look, I could care less if it go. I mean, I know you're not going to like hearing this, Chuck, but I don't care if it goes below $3, because I just look at it as an opportunity to pick up more shares. So
so do I, and some of my board members, to be honest.
So look, you want to play games, you want to drive it down. It's got a beautiful. I'm going to have to move my portraits in the background, man. I like the bull.
Yeah, that's some pretty cool artwork you got going on there.
Yeah, it's pretty cool. I'm digging it. I actually created that with AI.
Really? Okay, cool.
Yeah. When I get bored, I do stuff like that. Um, so if you look at this thing, it's got a reverse head and shoulders pattern that has developed. And uh, I think that this $3 area, if it holds a support, that would be fantastic. If it doesn't hold the support, if it comes down to well, no, three. I mean, there's a really good area of support right there at three. Now, what you could do is you could come back down and maybe test this low over here. I would love that if that happened, but I doubt it's going to happen because I think you're probably going to have news flow um, that will combat that. But look, I've been watching this story for a long time develop, and I think that we are getting to some pretty exciting developments. The numbers you're throwing around are the biggest numbers you've ever thrown around, right? I don't think you do that.
With this company, yes.
Yes. Well, yeah, for this, but I don't think you do it casually. I don't think you're going to feel I would imagine, just knowing your character, would have to feel pretty good in order to publicly state those numbers, right?
Yeah, I mean, anybody that knows me and knows the company, we try to be very transparent, very straightforward. We're not trying to fool anybody at all. That's not my nature. Certainly based on my military background. So
Yeah. Okay. All right. So I would say this, and I'm not telling anybody what to do. I don't tell people what to buy or what to sell or when to sell. All I'm saying is, yes, the quarter wasn't the best. We know why. Timing issues. The business hasn't gone away. As a matter of fact, the business has actually grown. That backlog those orders have grown in size, right? You had a merger happen. You actually acquired another customer essentially from that merger happening, right? So those are two very positive things that I think you can count on are coming. And then on top of that, you've got the industry itself, where the union players are, I would say, excited about the product and want it, and they're going to be driving that. I see a lot of positive things here, and I don't really care what the economy does. Um, Last time I checked, the railway industry was a pretty important industry to the country. I don't think it's going away. Do you, Chuck?
it absolutely isn't. I've only been around the rail business, for about 3.5 years, and I'll be honest with you, I had no idea how important the railroads are to the overall commerce, and be honest, welfare of the United States. I mean, water treatment plants, for example, require large quantities of material that basically, makes the water safe to drink, and it's so much it has to be delivered by rail. So I mean, just that one little example, it's just the rails are super important to the United States, more so than I ever thought before I came here.
And keeping those railways safe is, I think, becoming a big priority, especially with all of the derailments that have happened as of late, right? Those things should be.
Yeah, there's certainly been an emphasis in the industry. We've seen it with our Class 1 customers. There's a big emphasis right now on safety. And again, I think the rails in general are already pretty safe. They all know that they need to be even safer. Unfortunately, when these real large accidents happen, it causes everybody to get real thoughtful about it.
And the rail car owner that you were talking about, they have liquids. They have what was it that you said?
Yeah, they basically they're carrying, they're producing something that we call hazardous material.
Right.
Right. But, when you think about hazardous material, like, oh, that's horrible. But believe it or not, a lot of these hazardous material that's produced, whether it's in liquid form or in a solid form, is actually very important, to other components. Like, think of what would happen if you didn't have plastic, in your house, right? To, like plastic wrap, sandwich bags and stuff like that. That's actually made out of material that would be considered hazardous material. We have to have those things, oil, and other types of, pretty hazardous stuff. It's all very vital to things that are going on here in the United States.
And I think it would be for them, I think it would be a big time priority if they could reduce the risk of having a derailment where their cars are, leaking their hazardous material. I think that is something they would embrace big time.
Yes, we've talked to probably now over 40 rail shippers and car owners. A lot of them are super interested in being able to subscribe to the data that we have, and they primarily want to use it to do what they call conditions-based maintenance. A lot of these folks, they ultimately pay for the maintenance, even though a Class 1 railroad may do maintenance while it's on their network. Ultimately, that bill still goes back to that car owner or shipper. A lot of those car owners and shippers have their own depots where they do their own maintenance. If they can do the maintenance at their own depots, they can do it for about a third of the cost. So there's a lot of cost to be saved in that arrangement. And then the railroads themselves, the Class 1s, they're not in business. They do fix cars, but it's not their primary business. They want to be moving cars and moving freight and commerce, across the United States, not stopped on a siding or in a switch yard fixing cars.
Yeah, that makes sense. That makes a lot of sense, right? And you help both.
Yes, we do. Yeah. And then we've also a lot of interest right now because our system can see illegal riders on the cars, and so that is of tremendous interest to Customs and Border Protection. And I think there's a bill in Congress right now where Customs and Border Protection is getting some significant funds to purchase additional technology and things like that to help with the border situation.
Did you also recently have, it just hit me, some additional algorithms that you're either coming out with or came out with recently?
Yeah, so we've been right now we call it our portfolio. So our AI portfolio currently has I think it's about 43 to 45 algorithms, individual algorithms. Each one, of course, is pointed at an FRA or AAR rule and regulation. That continues to grow now. As we get better at it, we're kind of adding more faster. But what we've also done is, and I tell people this, so a lot of AI producers will tell you, well, once you produce an algorithm, it will train itself forever. You'll never have to touch it. That's just not the case that we found out here the hard way with this AI, machine vision AI in the rail space for a lot of different reasons I won't go into. So part of our effort is to maintain and also continue to train the existing algorithms to ensure that they stay, firing at a very, very high and accurate and reliable rate.
Okay. I keep saying I'm going to end the call, and then I keep dragging it on. But these are important things, right?
Yeah.
I mean, they're important things. So, Chuck, what is there anything that you see in the next, I don't know, next couple of months maybe, or when do you think we should do a follow-up?
Yeah, I think we have our earnings call. It's kind of a short turn this time, about the middle of May. I think by certainly after that call, maybe towards the end of May, I expect I'll probably have some good news by then, and probably hopeful to have another call with you.
Okay, perfect. Okay, man. For anybody that's watching, if you don't want to get involved in the stock here, that's fine. I would at least go to the website and sign up for investor alerts and pay attention to what's developing at this company, because it's not a railroad company. It is a technology company, and it's in one of the hottest spaces that's out there right now. I mean, there's nothing hotter than AI, but there are a bunch of companies out there that claim they're AI that are not AI. This is a genuine AI, machine learning, edge computing company. So I would put this on your radar. Okay. Chuck, thanks for taking the time. Hold on one second. I'm gonna shut this off unless you have anything else you want to.
No, thanks, Tim. Thanks everybody for watching.
Okay. Hold on one second.
Thank you for tuning in to today's interview with Chuck Ferry from DUOT Technologies, ticker symbol DUOT. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, make sure you smash that subscribe button. All of those things are extremely important to us here at Alpha Wolf Trading, and we appreciate you taking the time to do so. Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.